We're jumping straight into strategy today. Everyone is watching the price action, and it has been wildly volatile this year.
Absolutely.
But the real story isn't just the price swings, it's how this company's, unique adoption of fair value accounting for its massive Bitcoin treasury has created these explosive yet incredibly erratic gap earnings.
It creates a tremendous paradox. I mean, if you look at the third quarter of 2025, for example, the company reported a massive, what was it, $2.8 billion in net income,
Wow.
which delivered an $8.42 diluted earnings per share.
That sounds like a blockbuster quarter for any software firm.
It would be, except when you peel back the layers, almost all of that gap profitability was driven by $3.9 billion in unrealized gains on their digital assets.
So paper gains.
Exactly. Meanwhile, the legacy software operation, which is still the fundamental revenue source, had stable, high gross margins around 70.5%.
So the stability is masking the volatility, and I guess vice versa?
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
If you're enjoying the show, make sure to subscribe and hit the like button. It really helps the channel. And definitely let us know in the comments which stock you want us to simplify next.
All right, let's look at the bull and bear case for strategy right now. The core thesis here is pretty straightforward, really.
It is.
When you buy this stock, you are buying two fundamentally different companies that are sort of tethered together.
It truly is the ultimate market hybrid, and understanding both of those components is absolutely key to understanding the risk.
Correct. So the first component is what we could call the stable, the revenue-generating engine.
The software.
The legacy enterprise analytics software business. It's not the exciting part of the story anymore, but it is critical. Those gross margins, consistently hovering around 70%, generate reliable, high-quality cash flow.
And that stability, importantly, it covers their corporate overhead. It covers all the operational costs of the entire company, no matter what Bitcoin does. It's like an operational safety net.
Precisely. Now, the second company is the Bitcoin engine.
Right.
This is the digital credit platform and the massive treasury strategy has accumulated. This component is the primary driver of its current market valuation and, more importantly, its explosive earnings volatility.
And the scale is it's unparalleled. As of late 2025, Strategy holds approximately 640,250 Bitcoin.
The single largest corporate holder?
By a huge margin, a factor of magnitudes.
And that sheer size, that treasury, is the lever driving these dramatic swings in reported earnings.
Which brings us back to the accounting pivot we kind of teased at the start.
Yeah, walk us through that accounting nightmare for a second. We talked about the $2.8 billion positive income in Q3. What happened when the asset went the other way? Well, the reverse is brutal. Earlier in 2025, when Bitcoin had a pretty significant correction, we saw the true volatility rear its head. The company reported a stunning $4.22 billion net loss in the first quarter.
Ooh.
And that was driven by a $5.91 billion unrealized loss on digital assets.
That kind of lack of correlation just completely undermines any traditional earnings analysis. For most companies, a $4 billion loss is a catastrophic failure of the core business.
Yeah.
Here, it's just a Tuesday on the balance sheet.
Exactly. This is the core accounting insight. Fair value accounting forces the company to report the daily market fluctuations of this highly volatile asset directly through the P&L. You just didn't see companies doing this with their treasuries before.
No.
So make strategy the ultimate market proxy, where their gap earnings are entirely dependent on the fluctuating price of a single digital asset.
But even with that earnings visibility completely shattered by the accounting rules, management is just doubling down.
They are.
We have to ask, what is driving that extreme conviction? And I think that's where the bull case really starts.
Their conviction is not just rhetorical. It's anchored in their financial guidance. Management recently reaffirmed its extremely aggressive full-year 2025 targets.
What are they aiming for?
Operating income of $34 billion, net income of $24 billion, and a massive diluted EPS of $80.
That is an immense number, especially considering the losses they had to recognize earlier in the year.
It is, and the fine print here really matters. You have to remember that this guidance is anchored on a year-end Bitcoin price assumption of $150,000.
Ah, okay.
It frames their expectations and shows how much value they project flowing through the books if their main asset appreciates like they expect.
And that conviction is supported by their relentless capital allocation discipline. They are accumulating Bitcoin so aggressively, using every tool they have.
Yes, they are. They've used multiple financing tools, including their specific 4842 preferred equity programs and at-the-market or ATM issuance of common stock.
How much did they raise?
They raised roughly $20 billion in capital during 2025 alone, specifically to purchase more Bitcoin.
That level of dedicated capital deployment is it's unheard of for a company that started as an enterprise software firm.
It is.
And that is a massive amount of leverage on the balance sheet, which naturally raises institutional fears about, drawdowns and solvency.
Of course.
Which brings us to perhaps the most critical de-risking move they made, the cash buffer they set up in late 2025.
The $1.44 billion USD cash reserve. This maneuver was funded by a common stock issuance, which signals a real commitment to shoring up their capital structure.
So why is that specific number so important, and who is this move really designed to placate?
It's designed entirely to satisfy institutional investors and debt holders. That $1.44 billion reserve covers roughly 2.3 years of their annualized dividend and interest obligations,
Okay.
which total about $614 million.
So what this means is that if Bitcoin were to experience a severe or protracted downturn, a crypto winter, for lack of a better term,
Right.
Strategy can service its debt and preferred dividends for more than 2 years without having to sell a single Bitcoin.
That is a fundamental change to the liquidity narrative. It dramatically reduces the risk of a forced liquidation, which is kind of the institutional boogeyman in any heavily leveraged treasury.
It provides a massive security blanket against margin calls or defaulting on interest payments.
It removes the tail risk that prevents a lot of conservative funds from even touching the stock. And speaking of institutional movement, we saw a powerful technical signal recently.
You're talking to Jim Chanos.
The high-profile short seller, Jim Chanos, closing his short position on Strategy in late November 2025.
And the closing of a marquee short position like that often signals capitulation by the most aggressive bears, which can remove that downward technical pressure and, pave the way for a relief rally.
Absolutely. However, even with that security blanket and the apparent end of the short trade, the bear risks are still heavily punishing the stock.
So let's look at the overhangs creating that volatility and that discount. What's the biggest immediate drag on the price right now?
The most significant non-fundamental risk is definitely the legal overhang.
The lawsuits.
The multiple class action securities lawsuits that have been launched against Strategy, including those filed by Pomerantz.
What exactly are these lawsuits alleging? Is it just about bad timing on the buys?
No, they allege that the company overstated profitability and, more fundamentally, understated the risks inherent in its aggressive Bitcoin strategy. This goes directly back to that massive $5.91 billion unrealized loss they recognized back in Q1.
Right.
And while lawsuits are often, part and parcel of high beta investing, they create uncertainty, they consume management time, and they carry the risk of substantial financial settlements.
Beyond the legal risk, the volatility itself is a massive hurdle for institutional adoption, and even management is reinforcing that perception.
They are. The most dramatic evidence is the company's own widening of the full year 2025 net income outlook to a range of negative $5.5 billion to positive $6.3 billion.
Think about that range for a second.
Right. It just reinforces the perception of extreme earnings sensitivity. When your financial guidance spans a potential $11.8 billion swing, you are essentially telling the market your financial outcome is a coin flip dependent on one single asset.
Which feeds directly into a major technical concern that we know institutional analysts like those at JP Morgan are flagging.
And that is the index exclusion risk. Strategy has grown tremendously, but there is a potential for it to be removed from critical market trackers.
Specifically the MSCI indices.
Exactly.
But wait, Strategy has been a highly volatile, high-growth name for years. Why is MSCI exclusion suddenly a concern now? Is it related to market cap, or is it purely a governance and risk factor?
It's primarily a risk and governance issue, and it's tied to the concentration of the balance sheet. Indexes require predictable financial metrics, which, Strategy no longer provides because of that accounting pivot. If MSCI determines the fundamental business is now fully subservient to a volatile treasury strategy, removal could be triggered.
And if that happens,
It would trigger substantial forced selling and passive outflows from funds tracking those indices, which would place significant near-term pressure on the share price, regardless of what the price of Bitcoin is doing.
and we are seeing the market price in this deep negativity already.
Absolutely. The stock has been punished, declining, 67% from its recent highs. Analysts note that the current market value has fallen to, or even below, the value of its Bitcoin holdings.
The modified net asset value, or MNAV.
Right.
So if the market value is at or below the MNAV, what is the practical implication for someone listening? What does that mean?
It means the market is essentially saying, we value the Bitcoin, but we don't just discount the software business. We view the core high-margin software business, plus the corporate structure, plus all future cash flows, as having negative or zero value.
Wow.
The risks, legal, accounting, index risk, they're so severe that they actually offset the entire value of the operating business. That is the definition of a deep, deep discount, but it comes with a crippling risk premium.
So if the market has priced in these risks, what are the near-term triggers that could cause a reversal? Let's look at the upcoming catalysts you need to be tracking.
The next few months are absolutely loaded with inflection points.
The first major one has to be the Q4 2025 earnings announcement, expected around February 5th, 2026.
That report is essential. It will reveal the final year-end Bitcoin holdings, update forward guidance, and most importantly, confirm whether management's crucial $150,000 Bitcoin price assumption for the full year was met.
And if they missed it significantly, you have to expect pressure.
For sure. But if they hit or exceed it, the relief rally confirming their high conviction thesis could be substantial.
We also have leadership and governance changes on the immediate horizon that are important for institutional sentiment.
Yes. The EVP and General Counsel's retirement is effective December 31st, 2025. This puts the spotlight squarely on succession planning and how the new leadership will handle the aggressive capital allocation strategy going forward.
Right. Any perceived softening of the commitment to the Bitcoin strategy or any change in how they manage the ongoing lawsuits could be a huge catalyst.
A very significant catalyst.
Yeah.
And then institutional capital flows will be critical in January 2026.
They will be. January brings the ETF rebalancing and the institutional quarterly holdings disclosure window.
This is when the market will get clarity on who bought into the new preferred share classes, how large institutions are positioning their capital.
And we'll get concrete data on the impact of any potential index adjustments, like that MSCI decision. Flows matter enormously for a stock trading at these discounts.
They really do.
Finally, what about the speculative buzz, the rumors that could move the needle on confidence?
Well, there are two key pieces of speculation circulating. One is a potential spin-off of the legacy software licensing business,
Which would effectively allow the remaining entity to focus purely on the capital structure and the Bitcoin treasury, becoming a pure-play treasury vehicle. That could appeal to different classes of investors.
Exactly. The other major rumor revolves around potential S&P 500 or mid-cap index inclusion. This possibility has arisen following the material increase in public float after those large preferred stock offerings.
An index inclusion, if it happens, would force passive funds to buy, creating a huge technical tailwind.
It would?
That's the breakdown on strategy for today. It's a completely unique, high-octane market story.
It is.
Ultimately, what this all reveals is the core trade-off for you, the listener. Strategy provides highly leveraged exposure to Bitcoin, backed by that functional, high-margin software operation.
But the stock is currently trading at a severe discount because the market is hyper-focused on these non-fundamental risks. The lawsuits, the index exclusion fears, and the extreme volatility that flows straight through the P&L.
It remains one of the most compelling yet terrifying risk-reward calculations in the market right now.
I'd agree with that.
So, here is the final provocative thought for you to chew on as you consider this stock. The most important question for investors isn't just, what will the price of Bitcoin be next year?
It's deeper than that.
It's, will that specific calculated $1.4 billion cash reserve be enough to convince institutional investors that Strategy's capital structure can truly withstand major legal or regulatory shocks, allowing the stock to finally trade at a premium to its underlying Bitcoin value again?
The perceived safety of that cash reserve is the linchpin that the entire valuation thesis hangs upon. It really is.
If you haven't already, subscribe so you don't miss our next breakdown. We'll catch you on the next one.